Hey, what's going on, guys? It's Ricky with Learn, Plan, Profit. Hope that you guys are all having a great end to your overall week. And I guess I should have said TechBud Solutions because this is not a live trading session. This is our Sunday Stock Talk. So what's up? Welcome to our Sunday Stock Talk. This is where I just give you a quick little recap of, what happened last week, what's to come this week. And then I'm going to break down 5 of the top stocks that you guys see value in. And all you have to do is type whatever stock you want me to break down in the live chat. I'll give you my opinion and then we can kind of go from there, right? So I also hope to see you during tomorrow's live trading session. I trade live every single morning right at market open for about 30 minutes to an hour. If you ever want to tune on in, it's the second link in the description down below. So let me go ahead and start sharing my screen and we could jump right into it. So overall NASDAQ market, I'm going to quickly touch base on what's been the recent market sentiment. Bearish. That's all I have to go off of, based off of the lower highs and the lower lows, right? This is on the 1 hour time frame. I'm looking at QQQ on the Webull trading application. If you want to try out the same trading app that I use, it's the 5th link in the description down below. But yeah, we're trading below the moving average. We're trading below the EMA. We've been showing signs of lower highs, lower lows. The big question is what's going to happen this week with the CPI data report. So this week we have CPI on September 11th, 1 hour before the market opens. So I'll leave it up to you guys. I don't know if you guys want me to go live. In today's earlier video, I got really good feedback because you guys liked how I articulated kind of just like this focus kind of changing for the overall market, right? The really big focus for the past 2 years has been inflation. And these CPI data reports were very significant monthly reports because the CPI report comes out once a month. But recently, the CPI reports have not been that big of a deal, right? The job reports, the job market, the unemployment rate, those have been much more of a focus for the Federal Reserve. So that's kind of the thing that I've been picking up from the market. And when I was reading different articles, that's one thing that I like to do is I like to see if my opinions, if my thoughts are something that are also expressed by other news outlets or institutions. And I thought it was an interesting article, so I made a video about it, and it seemed like a lot of you guys agreed with me. Now, just because we all agree doesn't mean that it's right. It just means that it's a characteristic that we've been picking up about the market, that the market hasn't been as responsive to these CPI reports, but it's been much more influenced by these job reports. So that's kind of the shift that we have recently seen. So if you are just getting into the market, what a time to be here because inflation is coming down. There is an inflation report this week, and there's also initial claims and continuing claims this Thursday. That's a weekly report, and it seems to almost have a larger impact on the market than the CPI data reports. So is this live and will he respond to comments? 1, 2, 3, ABC. Yeah. No, it's not live. I guess I could just read the future, but yeah. So as of right now, market sentiment is a little bit more on the bearish side. So markets are selling off. We'll see if that market sentiment continues because when futures opened, since they trade a little bit longer, the markets originally opened up in the red, but as of right now, to my understanding, a lot of these markets are slightly in the green. So we'll see. We've seen quick shifts of direction, and that's the thing that I'm really looking forward to it, especially if you signed up for LPP over the weekend. Make sure that you're ready right at market open. I'm going to send the link via Discord for our LPP chat, and then we'll go live and you'll see. We've seen many times that during pre-market, the market might be bearish, the market might be bullish, but then right when the market opens, there's a quick shift of market sentiment. There's a quick shift of structure, and we go from bearish to bullish or bullish to bearish. So there's no reason to try to predict. I'm definitely here to share our thoughts and where we see the market going and what could happen, especially right now, right? Because markets have been bearish. The thing that I do want to point out is could we slightly find a support and then try to run up to retest this EMA, kind of like we did here, right? We originally sold off. We found a support, went back to retest, descending resistance, went back to retest support, and then went back to retest EMA, got rejected, and then sold off. So now we sold off quite a bit. So that's the question. Are we going to just continue to sell off and drop below 440 for Nvidia? It might look a little bit different. Are we going to break below $100 per share and work our way down to $90 per share? Or are we going to find a support and come back to retest right around $106 to $107 per share? So I'm indifferent about it. I do not care, right? Because there's quick little trades that we can choose to take advantage of there. But we all know one thing, and that's not where the big money is going to be made. The big money is going to be made whether we either break support at 100, and from 100 we have a significant drop down to $90 per share. That's nearly a 10% move, right? Or if we finally trade above EMA and actually begin to show signs of recovery, that's about a 20% ROI. Last week, I got good feedback because I talked about best case and worst case scenario for Nvidia, if you were to go long, if you were to go short, and what it would yield in potential profit if it were to go on either side. And a lot of you guys were pretty excited about that. So if markets all of a sudden begin to show signs of a support, if markets begin to recover and markets begin to show higher highs and higher lows and progress on the recovery, I would not be against going long, especially at these cheaper levels. Nvidia trading at 102, NASDAQ market trading at 464. Do I think markets could drop a little bit more? 100%, especially if that sentiment continues. So I'm in no rush. I'm taking it day by day. I'm taking it week by week. But that is one thing. We're focused on one thing, and that is market direction. So all right, so Ricky, you were too bearish, which is why, okay, definitely, yeah, I get it. I've always been someone that at very overbought levels always likes to remind beginners to not get caught into the hype. So I think you're a really great example of someone that says, oh, why were you bearish during a really strong bull market? Well, or a bull rally, right? Just like Nvidia and just like SMCI, someone has to look out for the beginner, right? Because while everyone is like, oh my God, these markets are so bullish, they're going to go higher for longer. What did I say many times as this thing was aggressively making new highs? Anytime something makes aggressive new highs within a very short period of time, I have a lot of beginners that watch my videos. My job is always to encourage them to not just take upside potential into consideration, but the downside risk. And I'm very happy to do that. And even if that means that I lose some followers because, or you don't watch my videos as much, I get it, right? Because I am very repetitive in what I say, but I do it for a reason, because I know big picture, just like these really strong rallies, for the few people that might have just even taken some profit at these overbought levels, I hope that because I know I was so focused on risk management, I hopefully saved some traders 60 to 70% in potential loss with SMCI or with Nvidia, right? We're not even talking about a shitty company. We're talking about one of the most valuable companies that's publicly traded. From highs of 140 to its recent pullback, that's a 26% drop. I mean, we're talking about 1/4 of the value of Nvidia just, obliterated. Where did it go? Again, it was an overreaction within a very short period of time. So that is one thing that if you are new to my channel, I will always talk about the good side, but I will also always talk about the bad side. Markets have recently pulled on back that if you're part of my LPP team, you know that, although I do like talking crap on Nvidia, everyone knows that's part of LPP that I've been waiting to buy Nvidia at $90 or $100 per share. I love Nvidia. I just thought it was too overvalued within a short period of time. But now that it's pulled on back, now I can justify it, right? I'm a deal hunter. That's just how I'm wired. I'm not here to apologize for that. That's just how I am, right? I would rather buy during distressed times, but at least I get it for a good price where I do my part in trying to make money as now it recovers. So now when it goes back to $120, $130, $140 per share, I'm up 20%. I'm up 10%. And I don't need gains that big. I trade with a decent dollar amount that if I make 10, 15%, I'm the happiest person I can be, right? My returns, when it comes down to the day trades that I choose to take, if I catch 3 or 4% of a move, I'm ecstatic. I'm not one of you GME or AMC pumpers that look for 10 or 20% and you're still not happy. I like to make my money and I bounce. Very, very simple. So with that being said, Let's go ahead and break down some of your stocks. Yeah, I do not trade options. I appreciate you, Scratch Life, I think, answering Carlos's question. Yeah, I do not trade options. I never have. I think if you want to try it, be my guest. I've heard very risky things about it. I trade shares. So, that's what it is that I do. So just want to make sure that is very clear, that if you decide to sign up for LPP, it's very clear that during my live trading sessions that you're going to be able to get access to every day. You're not seeing me trade options. You're seeing me trade shares. Okay. So, let's do it. So let me break down your stock. Just share it in the ticker call out format. All I ask you to do is, if it's not too much to ask, drop a thumbs up, subscribe to the channel. And if I don't answer your question or your stock here, you can feel free to message me at any time via Instagram. Everything is linked in the description of this video. So excited for LPP 3.0. Thank you, man. Appreciate it, Clark. GME to the moon. All right. ASTS. Let's see what this is. Okay. Very short period of time. It went from $2 per share to $39 per share. And again, this is just my opinion. If you want to, buy into this, be my guest. So it looks like all of a sudden, I would have to look into what happened. I don't know if this was a merger or why all of a sudden volume was flat and then it just all of a sudden began to really experience higher highs and higher lows. It looked incredibly bullish for a decent period of time. It's been about 3 to 4 months almost, but it peaked, it pulled on back, and now it's a descending pattern. This is where you can get caught in a lot of trouble when you don't wait for confirmation of a pullback. So when I see moments like this, that all of a sudden it began to take off, first off, it would have to go beyond technicals. I would have to look at the fundamentals of why did this all of a sudden begin to take off? And what happened recently that has corrected itself? Did it lose its hype? Is it losing its momentum? Is this just the beginning? Is it going to go from $25 per share all the way back down to $3 per share? That's kind of where my head begins to go. But I know if this were like Apple stock or something like that, then I would be like, oh, okay, it pulled on back. It's an ascending uptrend pattern. Maybe I could buy into the lows and sell it at the highs, right? So this could be a potential support. If it begins to show signs of a reversal, we've talked about it before, 3 stages of a reversal. There's the rejection, consolidation, and then if we do get confirmation, kind of just like this, right? We break above, it begins to rally, lack of progress, we take profits. So now it pulled on back, came back to retest. If it finds support, if it begins to show signs of reversal, then maybe we could look at this on the 1 hour time frame, and I could catch that reversal when there's actual indication of a recovery with a nice little stop loss if it breaks below 25.50, because that seems to be a very pretty common support. So what I'll do is if it breaks below 25.50, that's, all bets are off. Break of pattern criteria is no longer there. It's a descending pattern, and this thing's probably headed back to, $15, $10 per share. But if it does begin to show signs of a recovery, then it could be something that I could consider entertaining. Obviously, again, I would have to do more of a fundamental analysis on why all of a sudden this thing began to skyrocket, what happened here, to really pick up the price and to see if we can come back to retest. Now, let me tell you one thing. If this thing does begin to recover, but then now again, it doesn't go as high as it did before, then you have a strong descending resistance and a strong descending pattern where then I would really consider at that point to maybe stay away from the stock, because if it's showing lack of progress with the lower highs, then at that point, it's only a matter of time for it to break its support and then begin to sell off. So on the technical side, it wouldn't be the most ideal setup. So if you just wanted to trade a quick little reversal, I could see why this could make sense if that criteria is met when it came down to the 3 stages of reversal. So let me know what you think about my opinion and my breakdown. So let's go ahead and go to the second one. So that was the first stock that we're breaking down. Again, just drop a thumbs up, subscribe to the channel, and you guys can partake in that live chat. So NNE, yeah, I kind of want to do stocks that we haven't broken down too often. Okay, well, I don't want to do these kind of stocks. Okay, strong descending pattern. And again, this would be kind of like what I would want to stay away from. And again, that's just my opinion. I'm not a penny stock trader. It's too risky. And this thing's incredibly bearish. Lower highs, lower lows. Yeah, I get it. It's testing previous support range. Maybe it could begin to recover. There's so much opportunity out there that this is the least of my worries, especially with Nvidia selling off. and being relatively pretty cheap, I would rather make 10% on Nvidia on that recovery, since again, Nvidia is more of a solid company, than to try to hope I make 20, 30, 40, 50% on something that's a strong descending pattern. Again, if this is something that you want to test out, be my guest. If it breaks its support, that's a break of pattern. That would be a lower high, lower low. I just want to remind you, it's kind of like, do you want to learn how to swim with the current of the ocean or against the current of the ocean? Because with this, you're swimming against it, right? Lower highs, lower lows, and that's the analogy that I want to give you of, okay, well, why wouldn't this be a good stock to buy? Because you're choosing to trade a stock that has a descending trend, right? A descending channel with lower highs, lower lows, and this has happened for at least the past 2 to 3 months. So just something to take into consideration. Let me know what you think about that one. All right. TMF. Okay. I like this. So, and this is a 3x treasury bull ETF. Okay. I like the recent patterns. I think this is so important on why to pay attention to different time frames. A lot of people, a lot of beginners that are part of my LPP team love to ask, Ricky, why do you sometimes look at the 5 minute, the 1 hour, the 4 hour, and why do you look at the day chart? The best example or reason why I can express to look at different time frames is that different time frames give you different perspectives. If I were to ask you TMF on the 4 hour time frame, which is what we're at right now, what does that look like to you? It looks like a bullish stock, kind of, right? Right? Higher highs, higher lows. You might be like, dang, okay, I'm going to wait for this thing to pull back because I'm still a deal hunter. That's one of my criteria, right? Kind of like this. When it pulls on back, I'll buy into the dip and then make money on the recovery. It pulls on back, I can buy into the dip, make money on the recovery. So I'm going to wait for my criteria to be met, buy into the dip, and make money on the recovery. But again, different time frames give you different perspectives. You look at the day chart and you're like, holy crap. I would have been smoked. I would have not guessed that this is like what it looked like, bigger picture. And this would just give me less confidence. It doesn't mean that that trade isn't valid, right? Because if I'm choosing to day trade something, it doesn't mean that the day chart is super needed, but this is just going to be a reminder of like, oh, I didn't know this. This is a strong descending ETF over a long period of time. And I probably don't want to hold this ETF for a long period of time, and I probably don't want to give it too much size with position size, right? Do size, and you can adjust your confidence based off of the larger time frames. So see you at market open. Sounds good, Christian. I'll see you tomorrow at market open. This looks interesting though. I completely agree. It's still an ETF that I would pay attention to. It's been pretty bullish since, what is this? April. Since lows of April, 42.31, and it's been forming higher highs and higher lows. Let's see what that return has been in the past 4 months. 46%. If this thing pulls on back down to the moving average, which it tends to do quite often. So if it does pull on back to the moving average and it begins to rip up again, that's at least 12 to 13%. So even if I capture half of that, I always like to leave margin for error. So if I capture 5 or 6% of that, I would definitely be happy. So this could be something that I could consider if pattern stays valid, right? If it continues as an ascending support and an ascending resistance, but it just pulls on back. I get it for a decent price. I can then properly enter it in my risk calculator and set up my trade plan. Okay, I plan to buy at 56. I'll cut losses if it breaks below moving average, 54.90, and I plan to take profits at 62.73 or whatever the case might be. At that point, my risk to reward ratio will probably be met. Is my mic going out? Is it? I see someone saying that my microphone might be going out. Let me know. But yeah, this would be something that I would definitely add to my criteria. Okay, let's go ahead and move on. Let's do 3 more. So that was the second stock that I was breaking down. Let me go ahead and do 3 more stocks. Okay, it looks like we're mainly good. Let me know if it continues to happen, okay? Docu, what's going on, Hugo? Okay, so it looks like DocuSign just released earnings last Thursday. It was quite good. Will this be posted? Yeah, Anthony, if you don't watch all of it, you can always go back and rewatch it. It will get posted after we close out the live stream, so I appreciate you asking. Again, I know that maybe recently it had decent earnings. The market's not digesting it that way. So I would look a little bit deeper on why. DocuSign, at least for the past nearly 2 years, has been trading sideways from lows of $38 to highs of $65. It's not been indicating signs of an uptrend and not really indicating signs of lower lows either. But with that being said, let me ask you one very simple question. Do you want to be invested in a stock or trading a stock that has unclear direction? Probably not, right? You want direction to be most likely in your favor. And as of right now, it just doesn't look like DocuSign has made any progress on the upside. And because of that, I would just have to say that it wouldn't meet my criteria. So what I would do is I can set my alert. I can set my alert over here. If it actually begins to show signs of an uptrend, then I can, set my alert, wait for those higher highs, wait for the higher lows, wait for that progress on the upside. Then at that point, I can make sense of wanting to go into a trade. But remember, you are the decision maker on what you choose to take advantage of, what you invest, what you day trade, or what you swing trade. So if you see that, I like the stock, I like the company, I want to buy it, but it's just not indicating any signs of progress on the upside, stay true to your criteria. The analogy that I want to use is imagine yourself as a baseball player. And if they were to ask you, well, how do you like a ball to be pitched? And for you, it might be slow and straight, right? They might throw curveballs at you. They might throw sliders at you. But guess what? You wait there and you wait until your criteria, your perfect ball is actually met, and then you swing. And when you swing, it doesn't mean that it has to be a home run. Sometimes you could miss, but again, at least you're only taking advantage of opportunities that actually make sense. Do you guys like that? So I like what you said about DocuSign. I don't see there to be a reason on why to buy it now. Let's go ahead and do 2 more stock breakdowns, and then we will call it a live stream. Okay. Okay. PLTR. Am I the only one that gets annoyed about this stock? This dang stock has been, I've heard a lot about it. I know it's Peter Thiel's company. Peter Thiel was one of the original investors in Facebook. Went from $5 all the way up to $30, and it's kind of been lingering over there like a little sticky fly. But it's had pretty rough history. I remember when it went from highs after IPOing all the way back down to lows. So I've seen the roller coaster that this thing has put its investors through. With that being said, I have to give credit where it's due. It has a beautiful ascending uptrend pattern on the day chart. Higher lows, higher highs. It does look overbought. That's just my 2 cents. That's just my opinion. I do think it's overbought. I think it could be due for a pullback. I would like to see this thing closer to the $24, $25 mark. And then at that point, I'd like to see if it could find its support again and begin to show signs of a recovery. Just like last time, right? It pulls back, shows signs of support, and then recovers. But as you saw the previous time, just as quick as it ran up, it could quickly correct itself. It runs up, it could quickly correct itself. So just something to be mindful of, right? As you choose to trade this, it's been validating the moving average quite nicely. We'll see if that continues. Just do not be surprised if it does all of a sudden begin to pull on back. Something to be cautious of, okay? All right, Sava. We're going to end it with this one. What's going on, Dave? Hope you're having a good Sunday, man. I want to end it with a good one, and Sava just isn't going to be it. Sava would be more of a stock that I would consider shorting than to go long. That's just my 2 cents. And the reason why is Sava is a strong descending pattern. Remember, look at different time frames. Different time frames give you different perspectives. This is a strong descending pattern. So imagine your stock portfolio looking like this. Probably not something you would be very proud of, right? It's constantly losing money. So do I want to put money into it? Well, no, right? Why would I want to do that? So go with the flow. This would be quite the opposite. It became very overbought within a short period of time. It's consolidating here. It's not aggressively or actively selling off, but once it breaks this support, I mean, I wouldn't be surprised if then it goes back to its previous support, 21.50, and then after that goes back down to $10 or $8 per share. So that's why I said the example of I would rather consider shorting something like Sava than going long on it just due to its history of consistently selling off. I still wouldn't short it because it's not actively selling off, but I would definitely watch it for a potential short due to how much downside potential it might have. So not going to break this one, end it with this one. I'll do one more, and let's see what you guys got. So I love your mindset, kind of like Mark. I appreciate that. Thank you. Watch him preparing for tomorrow instead of Lions game. Okay, yeah, I know. I heard football season is back. I'm not a big football person myself, but I'm seeing all these TikToks and reels of people were like doing their, what is it called? Like when you guys bet on like what football team you think is gonna win. And they like race on the track to see who gets to choose first. It's like draft or I don't know what it is, but I love those reels because it's like a bunch of like out of shape guys that compete and bet on who they think is going to win. So, all right. Fantasy football. That's what it is. Fantasy football. My apologies. All right. Yeah. So, Beto. Okay. So, I'm not the biggest fan of this one either. Let's look at this on the day chart. Yeah, very overbought, huge pullback potential. I have a good one that I think I'll end it with. I think a lot of you guys will be happy that I talk about it. This is a strong descending pattern. I know why you're paying attention to it though. It looks pretty cheap. If it finds its support and maybe begins to show signs of a recovery, you could potentially make money. This is kind of like catching a falling knife. Is it possible to make money? Of course, it's possible to make money doing anything. It's just, again, direction is against you. So when it comes down to this, it's not impossible. It just means that you have to be more calculated with your ability to enter and exit the stock successfully. So with that being said, be cautious, set your alert, and if you want to try to catch it, then great. Just know when to take profits. I just wouldn't recommend a stock like this with a strong descending pattern for a beginner because remember, the whole point of going with the flow and trading a bullish stock that is ascending over a long period of time is that when you're a beginner, you tend to make more mistakes. And those mistakes, as long as you make them in a stock that is bullish, at least you don't have to be as precise with your entry or exit. With a stock that's bearish, something like this, your entries do have to be a little bit more precise. So that is one of the main reasons. I just want to explain to you why. Why do people say focus on bullish stocks and not bearish stocks? That would be why. Because again, when it's bullish, you're going with the trend. When it's bearish, you're going against it. So Yasul, you actually brought it up. GME was the stock that I wanted to actually talk about. So I'm not too sure if you're going to like this or not. So I know you just donated to the channel. So again, you don't have to donate. But I did want to end it with GME. And the reason why is that supposedly, based off of the different tweets and I think there's like 1 or 2 articles that were written over the weekend, talked about Roaring Kitty might be back. I think he's done with Chewy. And there is someone that's been purchasing a lot of call options for GME, right? Is that the thing where there's a big whale, and this is what has been driving the price up for GME. Remember, GME and AMC are a pump and dump stock. I don't care what anyone says. A pump and dump stock on the technical side, the exact definition is a stock that is manipulated for a short period of time on false pretenses. And that's always is what GME is, right? It pumps up and every single time it has a 100% failure rate. I don't care what you say or why it failed. It's a fact. It has a 100% failure rate. Anytime it pumps, it will always dump. It pumps, it dumps. It pumps, it dumps. It sells off, it sells off. And then all of a sudden, thankfully to them or for them, Roaring Kitty is back. So then it pumps and then it dumps. And then now again, their Lord and Savior, Roaring Kitty, is back, allowing the stock to pump up. This brings a lot of excitement. This brings a lot of attention to the stock. And if it catches enough attention and enough traction, it could really get going. I'm not taking that away from you guys. Like I said, there's a lot of ways to make money in this market. And catching and taking advantage of these GME plays is definitely one of them. But it's all about when the hype, fails or peaks. If you know when to take profits, if you know how to manage risk, then that's all that matters. I'm not against those that like trading GME. I just cannot understand why anyone would bag hold and just buy and hold GME for no reason. It has a 100% failure rate for a reason. Even Roaring Kitty himself ended up liquidating his shares, right? That's how he came up and said that he had like $50 million, whatever the case might be. The only way he could have that capital is by locking in profits. So please, 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 if you choose to trade any risky stock and actually choose to trade it, then treat it as a trade. Have an entry, have an exit, know what your plan is. If it's at lack of progress, if it's at peak of momentum or volume, a shift of market structure, whatever the case might be, but do your part in taking profits, because I don't care how it is that you make it. If it's trading a blue chip stock or trading GME, my focus is just stick to your plan. And everyone is going to try to convince you that you should not sell, hodl, or whatever it is that they end up trying to convince you to hold. I just want to remind you, their opinions are not going to matter when your mortgage or your rent is due, right? Their opinions don't pay your bills. Money does. And it's never a bad idea to lock in profits. So I'm all for these moves, right? When it pumps up, I don't know how high the stock is going to go. All I know is that GME has a 100% failure rate. And what is one thing that I love to do when it begins to peak? I love to short that shitty stock. I do. So as long as shares are available to short, and as long as I can tolerate the short interest without holding that position overnight, then I'll make sure that I do my part in taking profits. Yeah. Supposedly it has earnings this upcoming week, right? So I have no intention of actually shorting GME anytime soon. At $23, I don't really care for it because it could probably just come back to like $21 or $22. I will consider shorting it if it starts to go to like $35, $40 and it begins to show lack of progress on the downside or lack of progress on the upside and it begins to show signs of a reversal. I would consider shorting it at that point if it meets my criteria, if shares are available to short, and if short interest isn't too expensive. We'll talk about that a little bit more during our live trading session once the opportunity ends up actually presenting itself. So it looks like earnings is on September 10th, which is Tuesday. And my guess it's going to be before the market opens is normally how it is. So I'm very excited to follow up. There's a lot of money to be made, but I do want to remind you guys that if you're not comfortable with the market and how it's performing, if you don't like this market downturn, as historically speaking, September is a slower or red month for the overall year, don't be afraid to stay cash. No one should be trying to convince you to trade, right? And if your criteria is not being met, if you're just not confident with the market structure, the market sentiment, then stay back. There's nothing wrong with paying attention to the market and waiting for, again, that analogy we said, for your perfect pitch to be presented, right? And you swing whenever it is that you see that your criteria is actually met. So very excited to follow up. I hope that we earned your thumbs up in this video. And I want to remind you, again, if you want to watch me trade live as soon as tomorrow at market open, it's the second link in the description down below. And I want to remind you that as of right now, the price will be going up to $700 if you don't sign up before LPP 3.0 comes out. So again, we are not offering any more discounts on LPP, so you can get in for the price right now. I think it's $4.99. It's the second link in the description down below. Or you can wait for LPP 3.0 to come out, and that will then be $700. If you do sign up right now for LPP 2.0, you will get grandfathered in and get automatic access to LPP 3.0. So the very simple question, when is the cheapest way to get into LPP. If you haven't already joined, it's the second link in the description down below right now before LPP 3.0 comes out. So I appreciate your time. Hope that earned a thumbs up. And yes, LPP is a one-time payment, lifetime access, and you'll get to watch me trade live every single day before LPP 3.0 comes out. So like always, I'd like to make sure that we end the year on a green note. Take care, team.